Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, we focus on the Nigerian stock market rally. Is it too late to invest? The rally is real, but so is the risk. The Nigerian stock market has delivered exceptional performance in 2026. By the end of July, the NGX All-Share Index has gained 57.62 year-to-date, while market capitalization stood at approximately 158.33 trillion naira. However, the market declined by 0.84% in the final week of July as some investors took profits after the sustained rally. Many who have watched from the sidelines are now saying, have I missed the opportunity? The honest answer is no, but this is not to abandon discipline. The numbers behind the market excitement. The rally is not driven by excitement only, as several companies have reported strong half-year results. MTN Nigeria increased profit after tax by 70.6% to 707.5 billion naira and declared an interim dividend of 26 naira per share. Seplat Energy's net income rose to 164 million naira with a 12-cent quarterly dividend, while United Capital's profit before tax rose by 80% to 27.78 billion naira with a 30-kobo interim dividend. These results are encouraging, but investors must still assess whether current share prices already reflect the improved earnings and dividends. Do not confuse price with value. A stock can represent a good company yet still become overpriced. Similarly, a stock may look cheap because its price is low even when the underlying business is weak. Before buying, assess whether the company's earnings, cash flow, assets, and future prospects can support its current price. Higher profits or dividends do not automatically make the company's shares attractive at every price. Do not buy merely because a stock has risen sharply or because everybody is discussing it online. By the time excitement becomes widespread, much of the immediate opportunity may already be reflected in the price. Buy in batches, not in panic. Investors who still want exposure to the market may consider buying gradually rather than committing all their available funds at once. Instead of investing 300,000 immediately, an investor may spread the amount over 3 or more purchases. If prices continue to rise, the investor already has some exposure, and if the market corrects, there will still be funds available to buy quality stocks at lower prices. This does not guarantee a profit, but it reduces the pressure to identify the perfect day to enter the market. Follow the business, not the crowd. The results season provides an opportunity to separate strong businesses from stocks driven mainly by market excitement. Pay attention to whether revenue and profit are growing sustainably, whether the company generates cash from operations, how much debt it carries, and whether its dividend is supported by earnings and cash flow. Also consider the company's industry, competitive position, and long-term growth prospects. A good company bought at an unreasonable price can still produce disappointing returns. Corrections are part of the journey. No market rises continuously. After gaining more than 50% within 7 months, period of profit taking and price correction should not be surprising. A decline does not necessarily mean the rally has ended. It may simply mean that some investors are locking in gains. Investors should prepare for volatility rather than assume that recent returns will continue at the same pace. Never use borrowed funds, emergency savings, rent, school fees, or funds required for short-term expenses to buy shares. Equity investing is better suited to money that can remain invested for long-term. Long-term investors are not too late. For genuine long-term investors, the fear of being late should not be the primary concern. The NGX will continue to offer opportunities as businesses grow, earnings improve, and new companies enter the market. Rather than trying to catch the lowest price, long-term investors should focus on buying fundamentally sound companies at reasonable valuations and allowing time and compounding to work. The market may experience temporary corrections, but disciplined investors with a long-term horizon can use these periods to accumulate more quality stocks. The greater risk may not be entering late, but staying permanently on the sidelines. Stock investing is not for everyone. Ensure it aligns with your investment objectives, risk appetite, and age. When in doubt, speak with a professional investment advisor. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, or feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 0708246347. Stay blessed and have a great week. Bye.